If your goal in retirement is to sleep well each and every night and to never have inflation eat away at your purchasing power, then SCHD has you covered. I think it's the best dividend ETF out there when it comes to the combination of the holy trinity of dividend stats, and that's dividend yield, dividend growth, and total returns. SCHD is never going to shoot your portfolio to the moon like some of the best growth ETFs of the world, but on the other side of the coin, it's never lost more than 6% in a single year since its inception in 2011. It is the ultimate floor stabilizer for any portfolio. Stay tuned if you want your dividends flowing and growing forever. In this video, we're going to quickly cover the basics of SCHD, and then we're going to dive back into the retirement scenario that I made a video about last year. I plan to provide an annual update to this model for many years to come to prove that this just flat out works. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please terminate that like button, subscribe if you haven't already, and drop me a comment below with your favorite dividend ETF to buy and hold forever. It's time for the Sunday shoutouts for the new channel members. A huge thank you to Tom Sholin, Omen George, Manny Vegvala, James Isner, Jagdeep Singh Dhaka, Brianna Way, and Jonathan Blackburn. Thanks for your support, and I'm sorry if I slightly butchered your name. I tried my best. Let's grow. SCHD Basics and Methodology. SCHD is the Schwab US Dividend Equity ETF. Its objective is to focus on companies with sustainable dividends, which is great for a retirement situation. It holds 100 companies at a time, and it weights them by market cap, and it also excludes REITs, or real estate investment trusts. Which is one of my favorite things about its methodology. Excluding REITs assures that all these US companies are paying nothing but qualified dividends. So when SCHD pays you a dividend, you know it's 100% qualified and it's taxed with favorable treatment, just like long-term capital gains. It does not add to your ordinary income, and it is not included in your tax calculations in general when you're building your tax table to calculate your marginal tax rate. It is tacked on at the end and at special lower rates, regardless of where you fall in the taxes. Okay, so to start, SCHD screens out all companies that have not paid a dividend for at least 10 consecutive years. And this gets rid of over 90% of the US companies that are in the initial hopper. And then it makes sure that the companies have a decently high trading volume, and it also ensures that they're at least $500 million companies as far as their market cap. And this doesn't screen out too many of the remaining companies. And then it takes all the companies that survived that initial screener and it racks and stacks them based on the following 4 factors: free cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. Individual securities are capped at 4% within SCHD, and any sector is capped at 25%. And I think this is a great way to manage a fund because it makes sure that no individual company or sector gets a disproportionately large slice of the pie. It ultimately helps reduce risk, which is SCHD's key role within our modern portfolio. SCHD is rebalanced on a quarterly basis to keep all the holdings in balance. And then the index is reviewed annually to add and drop new companies. I think the SCHD has the most sound methodology that I've come across for any dividend ETF. A lot of the other ones will just pull 1, maybe 2 metrics about the dividend, its growth rate or its consecutive years paid, and that's it. And they pull in a huge hopper of 300 to 400 or more companies. I understand diversification and everything, but I still think that that's more of a quantity over quality approach. It's time to get our nerd on in the next section. SCHD Key Metrics. Let's hop over to my screen to see what makes SCHD a great dividend ETF. I've pulled up SCHD on Seeking Alpha, which is my favorite site to research stocks and ETFs. And as I mentioned in the last video, I recently entered a partnership with Seeking Alpha. So if you would like to try Seeking Alpha Premium for free for 7 days and get $50 off your first year, if you like what you see, feel free to use the link in the description below. I highly recommend it. But the first thing I like to do when I'm out here on the summary tab is look at the expense ratio of the ETF. And as you can see here, SCHD has an expense ratio of 0.06%, which is nice and low, keeping those dollars in your pocket. And the other thing I like to review on this tab is the assets under management. And I'm feeling pretty safe here with $54 billion of assets under management with SCHD. You just want to make sure this number's above 5 or so billion to make sure that the fund isn't going anywhere. One of the areas I think SCHD shines compared to its peers is its holdings breakdown. You can see here that healthcare, industrials, and financials are all basically tied at about 16% of SCHD, and the technology is a mere 13%. And consumer defensive and consumer cyclical come in at 11 and 10%. And you also have about 9% energy. So it's very, very well balanced by sector. And as you can see, the top 10 holdings are household dividend names. I won't read them all off, but you can see right here. Besides Broadcom, which has had a major run up lately, it's gone bonkers at 5.5%. Nothing else is over 5%. And come rebalance time, these will all be brought back down to 4%. So nothing gets too out of whack with the top 10 holdings. And you can see here that SCHD has 104 holdings, and the top 10% make up 43% of the overall fund. Not too bad. All right, now on to the section we've all been waiting for with SCHD is the dividends tab. You can see on the dividend scorecard here that SCHD has a nice 3.4% trailing 12-month dividend yield. And that ends up being $2.66 for each share that you hold. And it has a ridiculously juicy 5-year dividend growth rate of 13%. This means that each year over the last 5 years, it's average giving you a 13% raise. Imagine if your day job always did that for you. And it's grown its dividend each of the last 12 years. It's never had a year in its existence where it pays less dividends than the year before. And if you're more of a visual person, you can see in 2014, it was paying $1.05 per share, and it stairs its way up slowly but surely to a whopping $2.66 per share in 2022. You've almost tripled that thing. Retire with SCHD, year 11. Last year, I put together a retirement scenario using 100% SCHD for the portfolio. We realistically would sprinkle in some growth ETFs or other dividend or interest producing assets in a retirement portfolio. But I wanted to show how powerful the combination of dividend yield and dividend growth could be. SCHD has both, plus a very stable floor, so I really wouldn't call someone crazy if they did roll with 100% SCHD in retirement. SCHD tends to do good when the market crashes hard, compared to other dividend ETFs that are a little heavier in tech, and that also don't scrutinize a company's level of debt. So when it hits the fan, SCHD usually stabilizes out a little bit better compared to some of its pure dividend ETFs, and also to pretty much all of the growth ETFs. We're going to first take a look at my ETF tracking spreadsheet to show why SCHD over the other dividend ETF options. Then we'll tack on a new year to the retirement scenario that we started out with one of my first videos last year. All right, so I'm on my ETF screen and compare Google Sheet, and I update this sheet at least once a week, and it's out there for the members of the YouTube channel. And what I've done here is I've filtered the roll by dividend just to get rid of all the cornerstone and growth ETFs that I track on this spreadsheet. So we're here with some of the quality dividend ETFs. And you can see a variety of information here. We have the assets under management, the holdings, and I just want to show how SCHD, so right now they're ranked by total rank. It's just an average of each category that I rank them in. So, you know, the lower number here is better. Starting here with the expense ratio, you can see that these are all basically in a tie. You have 0.06 for SCHD, VIG, and VYM, and then 0.08 for DGRO, and 0.07 for SPYD. We'll basically call that a tie. And the reason these ranks are here, there's lots of other stuff in the background that's filtered out right now. Some hybrids, cornerstones, and growth. So that's why these ranks aren't just 1 through 5. And when you look at trailing 12-month dividend, this is your dividend yield. We have 3.42 for, let's just sort by each one as we go. So we have SPYD is the best here at 4.7%. SCHD comes in the 2 spot in this one. And then VYM is up there at about 3%. And then DGRO and VIG take quite the drop off on yield. But then when you go to 5-year CAGR here and sort Z to A, SCHD has the best 5-year CAGR, and DGRO and VIG, which are built for growth rate, are right there, and they're amazing. And that's where you see this SPYD is poor at 2.5%. So it has a great yield, but not a great CAGR, whereas something like SCHD just is phenomenal at both. And then the 5-year total return, if we sort by this one, VIG is the king right now. It has a lot of tech, so that makes sense, but SCHD is right there. And then the other, and DGRO is pretty good too, but then the other ones are down quite a bit, especially SPYD. So, and I'm on my middle length tab because DGRO hasn't been around quite long enough to make 10-year information from this, but I figure 5 years is a nice little look back. But SCHD, as you can see, is just very competitive in all the categories, making for the best combination of that holy grail of dividend key metrics of dividend yield, dividend growth rate, and total return. It's just been like this for quite a while. We're jumping back into our scenario of retiring on SCHD that we started last year. So I'll give a quick recap here. Last year, we said that this person retired at the end of 2012. They took the $500,000 that they had saved and invested over their career, and they dumped it into SCHD as of 1/1/2013, the day after they retired. At the time, SCHD traded for $29.08, and that bought them 17,194 shares. And you'll notice this is $502,000, and that's just because I didn't want a fractional share, so I wanted to make this whole. So in this scenario, this is the yearly amount of dividends they're receiving each year after retirement, and 2012's information was just here as a placeholder. We didn't include this in their total received. You can see that just goes 2013 through 2023 now. This is our new year we added. So it's been 11 years. They've received $316,000 of dividends. Now they are living on this money. They're taking it and spending it and having fun. So they're not reinvesting, and their shares are staying at exactly 17,194. You'll notice the first year in retirement, they got $15,500 of dividends. And I won't read them all off, but you'll see that they exponentially start going up. You know, you have a couple lower growth years in here, only 7%. And then you have a couple booming years here. But overall, now in 2023, you receive $45,700 of dividends instead of the $15,500 from about 10 years prior. Now, of course, inflation is also ticking up, but your purchasing power is easily outpacing inflation, which tends to be about 2.5% over the years. 3 lately, but 2.5 is a safe number to use. So the purchasing power without investing another penny with no income and taking these dividends and spending all of them, you're just going up and up on the amount of money you can spend each year. And this trend will very likely continue, as SCHD has never paid less than the year prior in its history. Now you can see in 2023, a lot of ETFs and companies had a rough dividend growth year. Many of them snapped their streaks. SCHD had a rough one as well. It was only about 4%, but it did keep that streak alive of 12 years in a row of increasing their dividends. So on the chart over here, at the end of the year in 2023, those same shares are now worth $1.3 million instead of $500,000. So that's $800,000 of price appreciation, along with $315,000 of dividends received since 2013. So if you look at the total return without reinvesting, you're at $1.1 million. SCHD with drip. When I dropped my video last year about retiring on SCHD, a lot of people liked the video, but they said they would like to see a scenario where the dividends are reinvested. So the scenario I did, where you're living the dividends and not reinvesting a penny, and then just a parallel scenario showing the same thing, but reinvesting those dividends, assuming you don't have to live on them yet. Maybe there's other sources of income. So I'm gonna do that right now. We're going to use Portfolio Visualizer to do a back test to show what SCHD would have done during that same duration while reinvesting its dividends. So you can see we're pulling an 11-year period of 2013 through 2023. The $500,000 is being invested. We have reinvest dividends on, display income, yes. And as you can see, I've just put SCHD at 100%. So when we analyze the portfolio, we see that that initial $500,000 with no new contributions outside the reinvestments turns into about $1.9 million And that's pretty incredible. We'll get more into the stats down here. You can see the portfolio grows fairly consistently. Couple little dips. Here's COVID here, but for the most part, pretty stable all the way through. That's one of the beauties of SCHD. If you look at the annual returns, this is where you start to appreciate the high floor. So you have these big years where it's up 33%, like in 2013. You had a pretty big one in 21, up almost 30. In 2019, up about 27%. The thing that should stick out more for any long-term investor that's seen a lot of these things, look at the downside protection. You have 1 year down not even 6% on total return on the worst year. 2022, when VGT's total return was negative 30, it's down 3% only. So the downside protection is so nice to have in a portfolio. It, like I always say, and it makes some people upset, but it really is a good long-term bond replacement for any portfolio of 10 or more years of accumulation. Now, these are pretty impressive figures. It's been a bull run of the last 10 years, and VU and VGT will be higher at this point, but still looking at the annualized returns, you're looking at a per year return of 9.5% over the last 3 years, 14% over the last 5 years, and a very solid 11% over a 10-year stretch. And when you look at the full time, it includes one of those big years, 2013 from up there, you're sniffing 13%. So those are incredible returns. This includes the dividends. And your portfolio income just goes up, 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 as we've seen, and you're looking at 64.5K per year in 2023. That's adding up a little faster because you're reinvesting those dividends. See, this assumes all dividends were reinvested, but once you start taking them, you're just accumulating more and more because you're reinvesting over the years. Now you probably have, close to 6,000 shares at this point. I'll see all of you SCHD holders again in 2025 to celebrate yet another year of juicy cash flow. Check out one of these 2 videos right here if you're not already sick of me and you want to learn more. I really appreciate you sticking it out till the bitter end. Thank you for watching, and I will see you here each and every Sunday, and sometimes on a Thursday. Peace.